And how's it going, guys? This is a weekly concept review. We're going to be talking about one shot, one kill environments. We're going to be talking about conditions that allow traders to be a buyer or seller. And then lastly, we'll end off with a London close model. I know a lot of people have talked about that last session after the New York session. Can we still trade 10 to 12 p.m.? There is still a feasible idea to look for. So before we begin, we have to understand a certain concept, and that concept is going to be the opening price of the kill zone of the day, of the week, or the month. So if you can see on my chart here, I have a line that's delineating the opening price of a kill zone, day, week, or month, right? The beginning or opening bid. That's that price point. Now, everything that's below it is going to be discount. That's the automatic assumption. You don't need an indicator to understand that where overbought and oversold conditions are. So when price drops below this opening price, it's in a discount condition, which will expose traders to more ideal buy setups. Now, I'm not saying there isn't breakouts to the downside in a discount and price continues to sell further, being oversold. However, in those large dynamic setups that we see to the upside, we'll see a phenomenon that repeats often. Price is going to drop down below the open first and then form some type of setup on a lower entry time frame and then push to the upside back into a premium territory. Same thing can be said vice versa. When price moves above the opening price of the kill zone day, week, or month, we'll see it's placing traders in ideal selling setups. Oftentimes, you'll see price move in a range, push up really fast, and then sell lower, going back into a oversold condition. So it's leaving overbought condition, going back down to oversold. Now, this methodology can be applied to everything. The daily, it doesn't matter, the 5 minute, the hourly, the 4 hour, it's all fractal. But I would consider you guys to really focus on these here. When it comes to intraday trading, when it comes to swing trading, you'll look at the daily and weekly and monthly for these ideas. Let's take a look at what makes people a buyer and what makes people a seller. So let's move over to the side of the chart. So this was last week, and we're only going to mainly talk about Tuesday. Now, throughout the week, we know that there's ideal trading days. Those ideal trading days are going to land on Tuesday, Wednesday, Thursday. Now, I'm not saying you can't trade on Monday or even Sunday, if you want to count that as a half day, I guess, or quarter of a day, and Friday. I prefer for traders to look for trade setups during the middle of the week because that's where a lot of the news events to market and allow the market to either trend in one direction. You want to be in trending environments. You don't want to be in environments where the market's not primed to move. So midweek, the market is more likely to produce that range expansion Tuesday, Wednesday, Thursday, even Friday. But again, focus on those 3 days there: Tuesday, Wednesday, and Thursday. Let's take a look at for US dollar. So if you're familiar with the model, you've probably heard me say this countless of times. I sound like a broken record. But all we're looking for as a buyer, the ideal condition is for us to first and foremost be in a discount. Are we in a discount for New York session for the weekly chart? Yeah, we are. We're below Sunday's opening price there. That's the weekly opening bid. So the same thing we were talking about on the right side of the chart, the opening price, that's where the ideal, so pretend this line is that line there. When price drops below it, it's ideal for buy setups. Whether that's short term or long term, it's still ideal. So let's take a look at this New York model for gold on Tuesday. And I also believe there was a news event Tuesday for euro and the dollar at 8:30. At 8:30, I want you to take a look. At 8:30, there's news. We're not trying to anticipate the news. We're just following a strategy. Let's take another step further. Let's layer this. This is the opening price of the day. This is 12 a.m. Do you see that line? That's 12 a.m. That same thing is occurring here again for the day. True day open for the algorithm. The algorithm resets its premium and discount to be marked out on your chart because it's influential to how price is going to react. Then we take it a step further. We're looking for 7 a.m.'s opening price. We got it right here. That's 7 a.m. 7 a.m. or New York opening price. Now, at this point, we can see we're in a very oversold condition where we are based on the weekly chart, based on the daily chart for the day, and then based on the kill zone. We're cheap. We're very cheap. It's not expensive. Price gets lower and lower and lower, and it's going to make it more ideal for you as the buyer to say, let's try and find a buy setup, not a sell setup. So let's take a look at the model. So 5 to 7 and then to 10 a.m. So we'll take off this off. There we go. We can see this consolidation clearly between the London kill zone and the New York kill zone, and that's where we're framing the idea. Price drops down very cheap. All we're waiting for is price to run a sell side liquidity pool. Based on this price action or this chart here, we're going to use the lowest low that forms at 7 o'clock on the 15-minute chart. So we'll use that low as sell side. Now we're looking for buy side. Where's buy side? Over here. It's very simple. It's either going to be the highest high of that dead zone or any swing high that's unbroken. This is unbroken. So that's buy side there. This is unbroken. So that's buy side there. Look at how we're framing the thing here, placing a random box and telling you, oh, that's resistance. That's not how this works here. We need accurate information. If we want to be proficient traders, we need to be factual on the levels where we're keying off as buy side and sell side. So that's buy side, that's sell side. We're waiting for a raid on one side of the market. We see that, bang. Price is currently still below 7 a.m. and 12 a.m. and the weekly opening price all the way. Where is it at? Up here. Take a little thicker. That's the weekly opening price up there. We're well below because we're very deep for the kill zone for the day and the week. This is awesome. While simultaneously rating sell side liquidity pool, it's already giving you organic price action. You don't have to force this. The market is geared to more than likely want to rally up. We just have to look for the signs on a lower time frame to enter. We go down to the 1 minute chart. All we're looking for is a fair value gap through a swing high. That's my preferred entry. That's my new entry, the more recent one that we talked about and discovered probably a couple years ago. But the first one that I was using was the very first fair value gap that forms after rating the sell side. So in this example, back in the day, just the very first fair value gap. I know there's a BPR here. There might be other PD arrays here, but I'm just telling you what my eyes see. I can see the other PD arrays here too, but I'm just keeping it as simple in his layman's term for the average trader, right? I want that learning curve to be shortened. I don't want the learning curve to be large. I want you guys to be able to watch the video, apply it to the chart immediately, and see results. So we see the first fair value gap that forms would typically be our entry. But the entry that I'm looking for is a fair value gap that runs to a swing high, and it's right here. You see that? There's the fair value. I'll change the color of this fair value gap to let you know that that's the one I want. Make it green. That's the fair value gap I want. I want a swing high that's running through, that's being ran through with a fair value gap. That's awesome. So we would be going long on gold on the top of that fair value gap, the premium side. And again, we have to go back again to touch base on this. Where are we currently that we're picking, that we're choosing? It's forming below. Awesome. That's fantastic. And it's forming below the weekly opening price. That means we're going to go long in a triple confluence environment. So triple discount. We're going to go and we're waiting for the market to tag us in. That's all we're looking for. Press play. We took sell side, threading around needle, and an 830 comes out. Look at 830. Look at that 830 candle. 830 straight up into buy side. Many people may say, well, aren't you waiting for the news? Why don't you wait for the news? I don't necessarily would have to wait for the news if the market is already going to print the entry prior to it. If it didn't print this entry prior to 8:30, then I wouldn't have taken the trade. Simply, I would have just waited on my hands. But let's say 8:30 came out and then the entry formed. Then we could possibly talk about taking that long idea. But it must be where? Below 7 a.m. and below 12 Tuesday. This is not like 5 years ago. This is relevant. This was last week. Wednesday's price action on Tuesday. Again, another week. We're showing the same systematic approach on finding a buy idea while being in a oversold condition. It doesn't get any more simpler than that. One side graded, let's race back to the other side or reverse back to the other side. Amazing trade. Fantastic. And you didn't have to do too much. And we didn't mention anything about daily bias. We didn't say anything about it. We didn't mention anything about the weekly draw. We just came in here as a day trader looking for an opportunity based on what price action is giving us. We're not trying to force it to do something we don't want it to do, that we want it to do. We can't do that. That's just not the way the market works. All we can do is risk properly. And if you follow this step one, frame your buy side and sell side. Step two, check to see if you're what. Look to see if you're in a discount or premium, and then see what side of the market is rated first. Since we rated sell side, it was a lot more natural for me to say, hey, let's be a buyer, because I know there's buy side sitting up here, and maybe throughout the day or throughout this kill zone, it's going to get there to those targets. Now, I'm not saying it's always going to be 100% guaranteed, because people like to listen to somebody teach and think that they found the answer and this is it. They're going to have huge success. I'm here to tell you that's not entirely the truth. You're going to have downfalls, because it's more than just you taking the model. How much are you risking? Do you have a risk management protocol? What's your personality? Do you know when to stop trading? Do you have ideal trading days? Do you have ideal trade setups? How often are you trading in a day? There's other factors, right? But I'm just showing you here a simple step one to entry to TP or stop loss. There you go. Every time. Systematic trading is very easy because everybody can comprehend it. I'm not giving you something subjective. Again, this is not subjective. This is objective data that I've been showing for the last, 3-4 years now. Let's go on to another pair. So let's play this forward. Gold didn't really do much, as you can see, on an hourly chart, just to show. After that setup, it really didn't do much, right? It gave you the long. It was profitable for probably all the way to Wednesday till it came back down. But you can see how that short-term pivotal moment was successful here. It never got back up to Sunday's opening price. But that's not what we're here trying to expose. We're just trying to show you how we get into the market and be a buyer. That was your buyer condition. All the steps I just showed you was your buyer condition. Being oversold, taking out sell side, and having buy side available to be ran at. Let's go on to XRP. We could do USD. Yes. US dollar versus Swiss franc. Now, you guys know, if you've been watching the daily updates, we've been tracking this. If you're part of the mentorship, you know we talked about this trade idea. We even spoke about it on Zoom together live. This setup was a one shot, one kill idea. Now, there was other ideas that were one shot, one kill worthy, but this one was the one I really wanted to highlight. Now, Tuesday, again, look at the day it's landing on Tuesday. It's doing the inverse to what gold did. So you saw how gold rallied in that setup I just showed you. Look at how USD is going down. So look at that correlation. When dollar goes up, when dollar goes down, gold goes up. You see the correlation there, right, for Tuesday. So let's take it back to 7 again and walk this. Look at where price is. See that? Yes. Price is physically above 7 a.m. and the weekly opening price and midnight opening price. All three of those. 1, 2, 3. Let's go to another 15-minute chart. I already have the parameter set up here, so we don't have to waste any time. But there's that dead zone again, 5 to 7. We don't really want to trade there. We're just using it as framework We wait for buy side liquidity pool to be rated. As we can see, we clearly do that. If we take off all the annotations, this high is the highest high from 5 to 7. So we're going to use this candle as our buy side liquidity pool. I know there's other buy side liquidity pools clearly on the left side of the chart, but please follow along. That's that buy side liquidity pool ran, that red line that I just drew there. We purged that. So what could we be looking for now? We're looking for sell side reversion. Sell side and the lowest low here. It's not a swing low, but it's the lowest low between 5 and 7. So we're going to consider it a sell side liquidity pool. Ideally, it would be something like this, a swing low, but we're using this time period to help us. Now that we got that done, let's put 10 here, bring it back here. Here, keep it clean, right? Keep it clean. Gotta be meticulous. Buy side, we go down to the 1 minute chart and we look for that same entry. And look at the entry. The entry is a swing low, 1. Option to us to go short there. We don't know if it's going to fill the entire fair value gap. It's possible, right? There's always going to be a better entry. You're not always going to get the absolute sniper entry, no drawdown, like everybody wants to flex in their chats and stuff. But that's not necessarily what we're looking for. What we're looking for is to be successful as a trader and pay our bills. That's what we're looking for. We're not looking here to gloat and show off to other guys in the chat that we got a sniper entry. It's not the point of that. We're here to be consistent. We really don't care about all that stuff. That's where we would look to go short. Let's see if we can find the old model entry. That's the buy side rate right here at 711. Actually, no, it's 716. Buy side rate at 716. This candle here raids that 715 candle that we mark off here. So it raids that. I know it looks a little funky because the session indicator is not layered on to this, but this is still a part of the dead zone, that 15-minute candle at 7. So that buy side rate is taken. Perfect, right? Go back again, just so we're not confused. That's that buy side there. Look at that 7 a.m. candle, that high. We draw that line all the way out. We go down to the 1 minute chart. I'm showing you the steps. 1 minute chart. It forms our entry. The old entry is, and put this one in blue. That was the old entry. It's not bad. It's still a triple confluent sell. It's not the one I'm looking for. You see, there's no fair value gap. Let's run it through a swing low here versus this. These look like two different entries. This sequence and this sequence, two different ones. This isn't bad. Sometimes you'll get this entry and you won't get this entry at all. And then you'll still get the setup. You'll still get that setup back too. I could get into it. Some people who are thinking consciously about this, right? Critically thinking, they come up with some great questions. And I'm like, yeah. Sometimes people don't think about that scenario until that actually happens. And what's the protocol if that were to happen? So I really do appreciate those questions and those people that are thinking about it. Let's play it forward. There's some drawdown, right? We don't mind that. But look at that. 8:30 comes out. What happens at 8:30? The news at 8:30. I can't make this stuff up to you guys. I literally can't make this stuff up. 8:30 pulls this right down. Smash TP. Runs it. Again, I don't care about the news. I don't care about what the data is saying. Inflation definitely was going to have core inflation numbers was definitely going to have a fundamental impact on the market. Of course it was. Absolutely. But do I care about what the numbers are? Is inflation coming in hotter? Is inflation coming in lower? No, as a trader, as a day trader, you don't care about that stuff. You're a day trader. You have a quick moment of time to make a quick decision to be profitable. I'm not saying you have to rush it. Some people might be overstimulated when they do this stuff because they don't understand what's happening, especially if they're trying to trade on the 1 minute. But look at how we frame this from the 15-minute chart, and now we transcribe everything to the 15-minute chart. Interesting, right? When you take this all off, no context, right? You take this off. Take all this stuff off. Take all the lipstick, all the makeup off the chart. No context now. Look at that. There's no context on the chart. But as soon as we layer this market, we put the context on it, oh, crap. This market is rigged. It's absolutely rigged every time. It's rigged. Take it off, put it on. Off, on. It's rigged. And you can't tell me this isn't close to the truth, because it is. Because we see this same phenomenon repeat week after week after week. I don't know how many examples I have to show this. I show this all the time. Every week I show it at least 2 examples of this. This is a triple confluence sell. Triple confluence premium sell. Why is it a triple confluence premium sell? Because it's above New York Open, the kill zone. Put it in 7 a.m. to the wrong side. It even rated the London, the previous kill zone side too. Right, that's buy side too. We know that. That's buy side as well. That can be used as an objective structure of buy side liquidity pool. Stop loss above those highs in London. They run that out, but we're not really concerned about that. But those are for people that are thinking outside the box. This area here, we raid that one side and we run back to the other side. How much more simpler could that be? And look at how it is strategically placing that entry. It's so crucial to me. And how the quality of entry improves drastically when you wait for these conditions. You're not going in every single day, right? That trader that's undisciplined, coming here every day just forcing sells, forcing buys. Why? It doesn't make any sense when you can just wait for something that's this smooth. This was smooth. This was a great buttery trade to the downside. We didn't have to do too much. It didn't really pull us into a major drawdown, but you'll see times that it does pull us into great drawdowns. We will have moments of time where we get into like 10 pips, almost 14 pips. Oh, drawdown. This is a 1-to-1 again, by the way. This is 15 pips on the FX pair. This is 15. This is close enough to it. But look, 15. All right, there you go. About 15 for 15. That's a 1-to-1 scenario. This 1-to-1 scenario, though, look at how far it keeps going. Let's go on a 5-minute chart. Actually, yeah, we go on a 5-minute chart. Take off all the session indicators. We don't need that. And look at how this idea is that one shot, one kill. It's above Sunday's opening price. And look how fast it's getting back down to Sunday's opening price. Look how quick it got there. Look at that line. You understand? Impressive. It gets back down to the weekly open again. And where does it go? It takes out the previous daily low as well. Tag. That was Monday's low. Sell side. We went over that in the paid group. Look at that. We don't trade Mondays. Mondays, I don't like to trade. Mondays, what I would prefer, right? Again, even if we had a weekly sentiment that we were going to go short midweek or whatever the case may be for you, Swissy, this week, Monday, we would not trade. We would just allow Monday to print what it has to print. Give us the data. Give us the data for Monday. Then we come into Tuesday thinking, okay, ideal trading day. Let's see what we got. Where are we? Premium discount? Okay, we're a buyer. We're in a premium, we're a buyer. I mean, sorry, correction. We're in a premium, we're a seller. And then vice versa. Oh, we're in a discount? Okay, we're a buyer. You see how easy and interchangeable I can put those hats on just based on where we are, based on the opening price methodology or ideology? It's a belief system. Some people don't believe this, but I truly do believe this is trading 101. If you don't understand what being overbought is and oversold is as a trader, you need to stop trading. And we need to get these fundamentals down immediately, expeditiously. We need to get it down, okay? This trade idea continues to run on. This thing drops. Look at that price action. Sinks. That's that one shot. These are the trades people want to catch. These are the trades traders want to catch. And I'm here showing you how you could possibly get it. Obviously, it's hindsight now. It was last week. But when it was happening, we were catching it in the group. We were explaining it. The day of, when we caught that idea, we showed everybody, like, look, this was a trade idea you missed. Or maybe you got it. Some people did come and text me and DM me and say, yo, D, this stuff works. And I'm like, yeah, I know. It's crazy. And at first, it may not make any sense to you. You might be like, what the hell is this guy, Deontay? My name is Deontay, by the way. D''ONTE. My mom made me that. Very unique, right? It's not Dante. Deontay. And price action sells off really fast. You might not understand, okay, why are we selling in above the weekly opening price, Deontay? It just looks like it's rallying. That doesn't make any sense. The market's going up. How do you know what's going to go short? It's a leap of faith. And it's a leap, and it's experience, really. It's exposure. because we've seen this happen 12 months out of the year, over and over and over again. 12 months out of the year. You think this only happens one time out of 365 days? Out of 365 calendar days, you think this idea only happens one time? That's ridiculous. And you got several different pairs to trade from. Come on, and different crosses to trade from. Gotta wake up. Gotta wake up. Let's look at another pair. Let's look at what we got. EU. Let's look at EU. Let's move on. Almost done with this segment. And then we'll move on to the London closed kill zone. So the two topics we're talking about again is understanding where we are based on conditions to be a buyer or a seller. Let's delete that as a buyer or a seller. So EU, we're going to talk about this Tuesday, New York buy setup. Look again. Look at how this weekly candle produced itself. This is the 15-minute chart. I like it on the hourly. It looks cleaner. You can see the days a lot better. Look at that. Look at how it drops down below the open. It rallies above the open. It retests the opening price of the weekly candle. Just look at how rigged the market is. Very interesting. You can even see like optimal trade entry ideas on a bigger term or intermediate term, right? This high to this low. Price trades down into a range and then looks to possibly trade higher, right? Possibly. I don't know how next week's going to open. Maybe next week opens and it shoots up or gaps up somehow. No idea. But let's look at that New York model. Tuesday again. Opposite to what USWSI did. USWSI sold and you saw gold rally. So that means what? The majors, anything crossed with the dollar, probably had this model too. Just because I'm showing EU and not GU or NU doesn't mean it didn't happen there too, or in some fashion that it didn't happen there too. Let's bring it back. Hopefully you guys are still there with me. You guys can still hear me and see my screen because I'm not looking at the chat right now. This is being recorded and it will be posted onto YouTube. We will try to do this every Sunday. As farming season is coming to an end here in New York, I have a lot more time, which is why I started the mentorship program in the first place. Because I didn't have time. I had to end it because I had to start farming. I didn't have the time to do that. So I paused everyone's payments. And anybody else that was in it prior is in it for free lifetime because I really appreciate the support because I was going through a lot of things with trying to start the farm and trying to work out my schedule and get that whole business operated. And there were people there that still stuck by me and supported me when I could show up for them in the market and when they ask me questions. So I really do appreciate you guys always. All right. I got sell side here. This is how you should be approaching the market, like every day, as a day trader at least. Like I'm not trying to toot my horn or anything and saying this is the pinnacle of all trading. I'm not saying I'm an 8-figure trader. I'm not. You know, I make enough payouts to pay off the bills or help pay the mortgage or help pay this or pay. It's not like I'm highly successful and I'm a rich trader. It is something that is able to give me some supplemental income. That's really it. Again, I really don't think trading is going to change your life long term. That's just my opinion. I do think you need to find other ways to make money. Trading is not going to be always the sole primary income. New York Open, right? That's New York Open. Ta-da. Let's find midnight. 12 a.m. For that. Perfect. Mark that out. We go midnight open. We can keep going with the acronyms. Midnight opening price, right? And then we got that weekly opening price where? Up here. Nice. So you can see already we're leaning more towards the discount portion of the trade or of the environment. So the environment we should be thinking of, okay, we want to probably run sell side if we're this cheap on the weekly chart. Perfect. Can we do that for the New York session? Let's see. Let's check it out. Play it forward. Sell side raid. Very natural raid. Organic. It just does it by itself. It's not like I said go take out the sell side. I didn't say do that. It just did it on its own. I can't control it and force the market to go down. It just did that. And once it does that, I'm on game. Right? I'm hip to the game. I'm going to go 1 minute chart. I'm showing literally the same model on 3 different pairs. On Tuesday too. 8:30 news. We don't care about the news. Let's play it forward. Let's see. This is the first fair value gap that forms. This is the old entry. So I would have been long here. This is the old entry. I would have been long here. Right, a year ago, this is the entry I would have been using. Where this one? This would have been the old entry. Okay, so to keep that in mind, this would 1-to-1, same thing. 15 pips for 15 pips. Keep that in mind. It's blue. The green entry is the one that we're looking for. Okay, let's play it forward. It even runs out. Look, it runs out. It runs out another level of sell side. We don't care. Once it runs out that first level, the protocol is in play. The model is in play. We got the entry right here. Look at this speed to the upside. Inefficiency, busy. Buy side imbalance, sell side inefficiency. The market was inefficient on that sell side curve. Where's the swing high? It's here. In this example, it happens to be multiple swing highs. It doesn't matter. That's a question some ask. Does it have to be like 6 swing highs inside the fair value gap? No. It just needs to be 1 swing high inside the fair value gap. It can't be at the starting point and it can't be on the ending point. It needs to be in between the 2 points. Okay? Perfect. We got that through our head. 1-to-1. This is what we're looking for. Where is this green fair value gap forming? Look at this. Look how fake the market is. New York open, we're below it. It forms a sequence there. Midnight opening price, it forms it below there. Weekly opening price, Sunday, it forms it below there. That's a triple confluence idea. This is a one-shot, one-kill environment. I'll say it again. This is a one-shot, one-kill environment. Right back into Sunday's opening price. Magic? I know. Crazy. You just got to study the market. I'm not saying everybody has the same luck or journey when it comes to trading, but when I was studying it and what I went through and who I was listening to and what books I read, this is what I arrived to. This is 20 right now. This is me right now, 2025, 26 years old. This is how I trade as a day trader. If I had to come to any trading day, this is what I'm looking for. This is your ideal buy condition. You need to understand how this looks. It's not going to look perfect like this every time. Right? You got a nice little consolidation, right? You got a nice little consolidation, run sell side, run back. It's not going to look that perfect. Sometimes it's going to look sloppy, and it's looking like it's trading down like that. There is still going to be sell side. There's still going to be buy side. There's going to be buy side, sell side, all in between that range. But you're waiting for one side to be purged. It purges that, then you go back that side. All right? Hopefully you found that insightful. Let me check the chat real quick, see if anybody has any questions. No questions. All right, cool. Let's keep going on. Now let's jump into, so basically those 2 topics we talked about, we had it come together, right, as an entourage effect. We're talking about conditions that make us a buyer, conditions that make us a seller, and those one-shot, one-kill environments. We just showed all those one-shot, one-kill setups. There were a few others throughout the week during our typical kill zones like London, New York, and Asian. But now let's talk about London closed kill zone, a kill zone that I know that doesn't get a lot of love, at least from me. I don't know about you guys, but I don't like to trade London close personally. But if I had to go back and study the market and see how it forms, this is how I would trade it. It's very similar to all the other models. Nothing is changing. The only thing that's changing is the time we're framing our liquidity pools and the time we're trading. Nothing changes. It's just the time. All right? Time and place. Let's go to 15-minute chart. Let's go to... Oh, let's actually use today. Since we're on EU, let's use this one here, okay? Let's take this off the chart. Or at least this. We don't need that. Delete that. Delete that red stuff. Okay, let's put on the next kill zone. So let's play it forward. Play it forward, play it forward, play it forward. Here, 10. 10 o'clock. Get rid of this. We don't need this now. 10 o'clock to midnight. That's all you got. That's your last kill zone I would prefer you to trade. The real deadline, like absolute deadline, if you had to trade after 12 p.m. New York Eastern Standard Time in the afternoon, you're cut off now. It's 3 o'clock. If you're really desperate to find a little bit of a trade at the end of the day, 3 p.m. should be the last time you touch the chart. After 3 p.m., you're done. All right? Cool. This is midnight opening price. Perfect. Let's get 10 a.m.'s opening price because the kill zone, again, the kill zone has an opening price. slide this over. We'll just put it as 10 a.m. Right? This is London close time. Perfect. Where are we? Are we still below the weekly opening price? Where are we? No, we're above it right now, currently. All right, watch this. How we're framing the liquidity pool, just like the other models, we're just going to take New York session. We're literally just going to take the previous kill zone. It's not a dead zone, technically, but we're going to pretend it's a dead zone to trade London. That's all we're using. So we're going to look for this sell side, and sell side. Doesn't mean we get to these levels. We're just framing it. We need the context. Buy side. Great. So we got buy side and sell side. There's money sitting. There's stop orders, buy stop orders sitting here. There's sell stop orders sitting below those lows, right? Where is price currently? It's still teetering around the weekly opening price. That's weekly. Use acronym SOP, Sunday's opening price. It's still teetering around that. But we're waiting to see the sequence on what side of the market it raids. Play it forward. What happens? Price takes out buy side. Takes out buy side liquidity pool. Right? It looks like a breakout at some point. And traders can be profitable here if they were looking for a breakout continuation, because London close does produce that. Remember, these kill zones have different characteristics. So you need to understand how price will likely act. This kill zone will tend to either continue to push price towards that daily bias and really squeeze more out the market, or it's going to cause a nice little reversal and undo everything New York session has done, undo everything London session has done, or Asian session has done. That is what London close will typically do. Continuation or reversal. Price runs buy side. Bang. Nice. Okay. What are we aiming for? Sell side. So this could possibly be the draw. It doesn't have to get down to that sell side here. There could be other sell side in here that it could draw down to, but we know we're going for 1-to-1 anyway. All right. Give me 1 second. I'm getting a phone call, guys. One second, guys. I gotta put a key outside for my boy. He's gonna pick up the key to go to the farm. Oh, I'll be right back. I apologize. Where is the key? Okay, there it is. Okay, I am back. I apologize, guys. If you're still here, I appreciate it. Thank you. All right, let's continue. Recap. So we have 10 to 12 p.m. All right. Price raids that New York session buy side liquidity pool here. Breaks that out. It breaks it around what? 11:15 a.m. We go down to the 1 minute chart. And now all we're doing is what? Waiting for that entry to go short. Where is that entry going to form? I don't know when. We just allow price action to naturally do it and print it for us. So as you can see, that's a swing low. I know it doesn't look like it, but it is. If you zoom in on the 1 minute chart, there's a swing low. 1, 2, 3. That's the swing low formation. Let's make that blue. Let's make this fair value gap here. That's our entry. It's happening literally minutes before the session is about to close. This is why you gotta be available for the kill zone. I don't know when the entry is going to end. Yes, we probably could say there might be an entry that forms maybe a couple minutes before the news event, like you saw earlier with EU New York session, with U-Swissy New York session, and Gold New York session before that news event for 8:30 on Tuesday. And, and, and let's make this a 1-to-1. What we did. Let's play and TP hit. Like, that's it. That was the trade idea on the 1 minute chart. That was little to no drawdown too. You see this example? Little to no drawdown. This is the London close model. It's a triple confluence too, as well. This is technically a one-shot, one-kill territory trade. Just not a typical kill zone that traders will probably be looking for this setup. It's above its kill zone's opening price, the entry. It's above its Sunday's opening price. It's above 12 a.m.'s opening price too for the day, for Tuesday. That's crazy. It's like so time sensitive, and we're going to raid. I love these ideas. These are the ones I'm personally trying to catch and teach all the traders in the mentorship program. Let's go on to USD. This will be our last example. 1 minute chart. A 15-minute chart, actually. That was a beautiful trade. Let's get rid of this, all this stuff. We don't need no more. Oh, we need that. We don't need this. We don't need that. We don't need. Oh, we need 7 a.m. though. We don't need 5. There we go. Now we're talking about 10 now. 10 o'clock. Kill zone. Let's run it back. This is the opening price. 10 a.m. Where's buy side? Where's sell side? Let's check it out. Got sell side here. I think this is the day it performed it. We got buy side up here. We can just mark off the most recent levels. We don't have to mark off every level. Let's play it forward. Price fails. Look how price fails to break that buy side liquidity pool via 15-minute chart. Runs down again. Runs all the way down below 10 a.m. Below midnight. Below weekly. It's just crossing the weekly right there. Look at that weekly chart. It's just crossing it down while it's running that south side. Just putting itself in that environment again. Awesome environment for SOP. Right there. Put on the 1 minute chart. Follow the steps, guys. Follow the steps. It's a systematic approach. That's your kill zone. This would be highlighted yellow, I think, on my chart. There you go. See? It'd be yellow. And we got New York session. It raised that. Takes out that sell side there on the 15-minute chart. It's below the weekly. 10, midnight. Great. Look for the entry. Let's see if we get one. Nothing yet. Price comes down more. More. Literally minutes before. Again, minutes before the kill zone's about again. Trades right into it. Bang. Hits it. 1-to-1. There you go. Here. And those price too. And play it forward. Just to speed up the process. It's in drawdown. I want you guys to know, like, this is all drawdown, like where it's at, and and stop loss hit. So you see, not all setups will perform 100%. Just wanted to show that not all setups will be perfect. Even though everything aligned, it was definitely sustainable for X amount of time until it wasn't. Can I control that? I can't control that. I don't have the answer to that one. I literally can't control that. Let's go back to the 1 minute chart. We go over here to 1 minute chart. Over the entry is literally the same. It's a swing high. Fair. It's exactly the same entry every time you look at the chart. And I want you to see again, the swing high cannot be on the starting point of the fair value gap or the ending point. It has to be in between those two periods. There's no other. Press play. We already played it. And this is as much as we got in reward. I think what, 13 pips, probably 13 and change. Close, 12.2. Pay the trader and move on. Now, hopefully you found this insightful. I don't think I had another example to show. I don't think I did. I'm just gonna double check. We did gold. We have a gold example. All right, we'll show gold the gold example. Take this off. All this stuff off the chart. We don't need it anymore. Let's do this quickly. This is 10. Correction. This is 10. The open. 10 a.m. 12 a.m. Look what price does going into that kill zone. It raids sell side. Perfect. And then it ran back up to buy side up here. Nice. I know there's another one over there too. Mark it off. But look at how it takes out New York session sell side liquidity pools. And it forms some type of setup in a triple discount opportunity below 10 a.m. Go to 1 minute chart. Look over for gold. Take a look. Let's see if we can find the entry. Let's see if there's anything here. Scanning it real quick. This is not the entry. This is the entry right there. Perfect. Sit by a pip. Or it either just misses it. Not sure. But I'm just showing the same ideology again. There's that fair value gap. There's that swing high. Nice. Beautiful. Where is this fair value gap forming again? I sound like a broken record. I showed you the same example literally over and over again. Every single example was the same one on Tuesday. It's forming below all those kill zones opening price or ideologies opening price. We go for that 1-to-1, 15 pips for gold. Let's play. And done. That was awesome. It was a great trade. Around what, 11:30, correction. Around 11:30 at 11:29, 11:28. TP was smashed. Buy side was hit back on the New York session high. But that's how I like to trade daily. There's no magic behind how I'm trading. And I'm not forcing a lot of narrative. Everything is very natural based. And if I don't truly understand or if I don't know, I don't trade. I just don't trade. That's it. Now, if you guys have any questions, please let me know because I will shortly be moving on to the mentorship. This will be posted on YouTube again. If you are interested in one-on-one mentorship, I will be here. I do have availability. Hit me up, let me know, and welcome to the community. I will stay here for a bit. If there's any other questions, I'll answer them. If not, I'm going to jump right over to mentorship. I'll give you guys a few minutes. Any questions going once? Any questions going twice? Any questions going 3 times. And sold. All right, guys. Enjoy your weekend. I will talk to you guys later. Peace.